let's welcome in our guest. We have Mr. T.S. Anantakrishnan. He's Managing Director at Varanium Capital Advisors. He's joining us now to talk about the markets. Mr. Anantakrishnan, do you think this is the reaction that you were also anticipating from the markets? The Nifty has made a new lifetime high. What would you do now? Buy once we're above the new high, or buy even now?
No, I think as far as the Nifty is concerned, if you look at the overall valuation per se, we are already discounting much of the growth that we are estimating both in financial year 18 as well as financial year 19. So we're already trading on a trailing basis on financial year 17 at 22 and a half times multiple, and on financial year 18 or financial year 19, assuming an average of 18% growth, we are already trading at 18 times multiple. So as far as valuations for the Nifty is concerned, I think there is not much room for an upside. I believe that it will be kind of around this same level, maybe plus minus 2 to 3%. But I think the opportunity really is in outside of the Nifty, which is where there are a whole host of companies that one should be taking a stock-specific approach on.
Okay, if you don't expect the markets to see a runaway rally, can you give us some ideas where you think investors can make good money, ones that could be multi-baggers?
Yeah, I mean, without going into specifics, I can talk about sectors that we are looking at. Obviously, NBFCs are coming back on the heels of demonetizations. We are looking at how remonetization plays out in this coming quarter. There are a whole host of opportunities in that specific space. We are looking at an accelerated reforms process now, given that a single party has the majority of states in India, and given the fact that there aren't that many political events until at least until the Gujarat elections, which is probably about 9 to 10 months away. I think most of it will be geared towards economic factors. And so from that perspective, if you look at many of the NBFCs which have fallen in the recent past and have not reached their highs, those are good opportunities. What we would pay a premium to would be visibility of earnings. We believe there is a turnaround which is likely to happen because of the reflation trade that everybody is assuming will come through. So we do like some of the turnaround story, especially in the metals space. They've been one of the best performance in the last 12 months. I think that will continue. We think cement will start to see a higher capacity utilization. So I think that there's an opportunity out there. So depending upon sectors that you look at, there are a whole host of companies that one could invest in.
Right, but Mr. Anantakrishnan, you said that the market seemed to be factoring in the earnings of FY18 and FY19 also perhaps. Now, if you're also expecting that reforms to get a good push ahead, plus we have the big reform of GST, which will also kick in from July, then don't you think that the markets then re-rate? And there is room for the markets to go up even higher. If you expect that reforms to come through, then the valuations will seem more justified.
No, absolutely. I mean, don't get me wrong. It's not that I'm saying that the market's kind of peaked out at this level. All I'm saying is there are a whole host of opportunities outside of the specific Nifty index, because the Nifty index is constituted of these 50 companies which, from a valuation standpoint, are historically at much above their median valuation. Now, if you look at 2008 January, when the trailing multiples were at 22, 23 times. If you look at today, our trading multiple is at 22 and a half times. Now, if earnings start to go beyond 20%, which is the assumption that the street is making, and the last 4 years, pretty much that assumption's been belied. I think it's a tall task to assume that same 20% is going to come through. There are a whole host of companies outside of it. So I would probably say, hey, the markets may not come down because obviously there is people who are looking 2019 and beyond are expecting momentum to continue and a stability of government. A whole host of projects, especially on land reforms, in terms of power reforms, which are already underway, in terms of direct benefit transfers, which are already underway. Those will percolate down. So the point that I was trying to make is that perhaps Nifty is not the right measure to look at. If you look at something like a BSE 200 or a BSE 500, as you expand those particular set of companies, I think the opportunity lies in that space. So that's really the point. Can the Nifty go up to 95, 100, 10,000? Yes. Do I see that happening within the next 3 to 6 months? Not that I see too much of a momentum. These things can take you about 10,000 too, but do I see that happening in 3 to 6 months? We have to see how GST also plays out, because in the initial the impact of GST is also not good for the economy because of the way the GST is structured. But in a 2 to 3 year time frame, it bodes well. When the impact of the GDP, when it will impact GDP, and it will lead to at least a 1.5% increase in GDP.
Ananta, as far as earnings are concerned, what will be your call? Do you think that earnings have also bottomed out? Last time around, when you mentioned companies were growing at 20% plus for the Nifty 50 pack, right now there are a handful of companies which are doing so. So do you believe that earnings in Nifty has also bottomed out?
Yeah, I believe, that's a good point. The earnings in Nifty is definitely bottomed out. I think there is a whole host of opportunities within the Nifty itself, but I think it's all discounted at this stage, because we're already presuming an 18% CAGR between 18 and 19, and if that is the case, the room for error in terms of a disappointment is that much higher. So, but do I see earnings going down, because we've been averaging about 4 to 5% in the last 3 years? Do I see that continue? Not really. I believe that we will have earnings growth significantly above 10%, but whether we will touch 20, north of 20%, I'm not really sure yet.
Right. As far as global markets are concerned, you think Fed, European elections, or select European elections, that is something which the market has ignored for right now?
No, I think market's been anticipating this for quite some time. The Fed move has been well telegraphed. We're talking about an increase of 25 bips, which, if you look at historically, it's not too big a deal. I think the problem as far as liquidity is concerned in the world is not the case at this point, because you have both the ECB and the Japanese central bank who are anyways pumping in a lot of liquidity. I think the issue really will come when the 10-year starts to go beyond 4%, and when you start to see the squeeze happening on liquidity, and that's when you will start to see issues across emerging markets at least, and that will have a knock-on impact. At this stage, while the interest rates are being raised, I think it's still positive. We are in the sweet spot till I think the 10-year reaches 4%.